Hello and welcome to Quant Matters, where we talk about the quantitative approach to investing and finance. Today I want to give you an overview of the existing markets and assets, as they constitute the potential research and investment universe we are interested in. In general, assets are things with value that can be traded or invested in, and correspondingly a market is where you can buy and sell these assets. Access to these assets is variable. Some markets are not available globally. Some require intermediaries like brokers, some require a minimum amount, and some are only open to institutions. The first big division of assets and markets has to do with how easily one is allowed to buy and sell them, and the ease in which we can get data. After all, we want to quantify them. On one side, we have public, liquid, data-rich markets: equities, bonds, foreign exchange, commodities, listed derivatives, crypto digital assets, and altogether they account for about $312 trillion in value. On the other hand, we have private, restricted, or opaque markets: OTC derivatives, that's over-the-counter derivatives, private equity, venture capital, collectibles alternatives, and they amount for around $34 trillion. We can also add the real estate market, the biggest by size, with about $360 trillion of value. A note here is that you can have some indirect access to real estate and private markets through special instruments like REITs and ETFs, which we'll discuss in the future. So now let's discuss in more detail both the markets and assets available. We'll focus on public markets. Equity markets are where you buy ownership in companies, mainly through common and preferred stock, equity ETFs, and index futures. Bond markets, alias known as fixed income or money markets, are where governments, companies, and institutions borrow money, mainly through treasury bonds, corporate bonds, municipal bonds, and bond ETFs. Foreign exchange markets, or FX, are where currencies are traded in pairs, allowing investors, businesses, and governments to exchange one currency for another. Commodity markets are raw materials like energy, metals, and agricultural products, which are traded through spot contracts, futures, and related ETFs. Derivatives and the derivatives markets are where financial contracts like futures and options are traded, allowing investors to speculate on or hedge against movements in equities, interest rates, commodities, and currencies. Crypto and digital asset markets are where decentralized digital tokens such as Bitcoin, Ethereum, and other blockchain-based assets are issued, traded, and stored. We should also mention the relative size of these markets and assets. To have something to compare, consider that the annual global GDP is around $100 trillion. By size, the biggest market is the bond market, closely followed by equities. Commodities and FX, while still massive, drop by a tenth in value. Crypto, which is the newest asset class, is accordingly small, even smaller if you consider that half or more is concentrated in Bitcoin. And finally, derivatives. And since we're in the business of quantifying markets, we should also take a look at the number of instruments by asset class. Keep in mind that there are two numbers here. One is the approximate number of individual assets you can trade, and the second, much smaller number, represents the assets that are considered liquid, meaning they trade frequently enough that you can buy or sell them quickly at a fair price. While the universe is vast, almost 250,000 individual instruments, the number goes down dramatically if you only consider liquid assets, which account for about 40,000. Still a big number, and probably close to what a big quant fund and institutions use. The good news is that for quant work, we can use a subset of this universe. Anything from 100 to 10,000 individually chosen instruments can be used to capture the relationships needed for strategies and basic research. Wrapping up, I hope that by now you have a basic understanding of what's out there for you to invest or research. Left out from this overview are the individual characteristics of each asset class, something I hope to cover in future episodes. But for today, this should give you the overview I wish I had on my first day in finance. Thanks for watching. Like and subscribe to the Quant Matters channel for more quant content.